Hello, everyone. Happy New Year and welcome to the Jarvis Weekly. I'm Brian Dress, Director of Research here at Left Brain Investment Research. We're trying out a new feature here in 2022. We've been putting out a newsletter for the last few months called the Jarvis Newsletter. We cover a lot of the key topics over the last week of trading and other market themes that we think are important for investors to understand. We're going to go ahead and accompany that in 2022 with a video summarizing some of the key points that we think investors should take a look at as they read the letter. So let's just jump right into it with a couple of quick announcements. The first is if you want to get the newsletter in your inbox every Saturday morning on a weekly basis, head over to www.leftbrainir.com and fill out the form. Give us your email address and we'll send that out to you, and you can get that in your inbox every weekend as you work to get yourself ready for the next week of trading. And then the second announcement is we have a research service here at Left Brain Investment Research, and we provide about 9 to 10 full-length research reports from our analyst team on a monthly basis. These are the type of research reports we use as we make our investment decisions in-house. So it's usually $299 a month for the basic subscription, but we're running a special event this week for just $99 a month over each of the next 6 months. You can try out the service and see if it's valuable to you as you manage your own portfolio or if you manage client portfolios. So we encourage you to take advantage of that offer and get acquainted with the type of research that we provide here at LBIR. So with that being said, we'll just jump right into the summary of this week's newsletter, some of the key themes that we think you should be looking at as you read the letter and get ready for next week's investment week. So the first is just risk off. I mean, this is a theme that we've been seeing over the last few months. Basically a lot of rotation out of sort of growth-oriented sectors like technology and especially software, and reallocation toward more value-oriented sectors. And what we've identified are energy, materials, financials, and some selected retail. And a lot of this is being driven by valuations. Growth stocks are very richly valued in today's market, whereas value stocks have been undervalued or underinvested over the last few years. So there's a lot of movement there, and a lot of it's interest rate driven and also inflation. So higher interest rates and higher inflation environment is going to be negative for technology, or so the story goes. Whereas some of the sectors that we mentioned, like energy and materials, will actually thrive in higher interest rate or higher inflation environments. So that's what we're seeing in the markets today. And there's a concept known as the January Barometer, and it's a theory that says, the trends that you see in the first week or the first month of the trading year often actually persist for the rest of the year. And we went back and tried to do some research and run the numbers on the January Barometer and whether it was really a strong theory with evidentiary backing. The evidence was mixed for us, but that being said, it's conventional wisdom out there. So, we think investors should be at least paying attention, to the trends in the first week and the first month of the investing year, and being aware that might be, might portend for how the rest of the year is going to play out. So in that case, in that spirit, keeping an eye on what we saw in the last few days, a lot of strength in energy. Oil prices went higher. We look at some of the ETFs in the marketplace, and really one of the strongest ones was XLE, which contains a lot of energy producing companies. We think for 2022, one of our themes again is going to be sort of that rotation from growth into value. A lot of these companies have been underowned. For instance, oil companies make up only about 3% of the S&P 500, and historically it's around 6 to 8%. So we think there's an opportunity for a lot of expansion there. Another key theme for this year, kind of going along the same lines of the value concept, is, not every value stock is created equal. There's this concept known as a value trap. We talk about that in this week's letter. Companies that look cheap on some valuation metric, be it price to book or price to earnings, that don't have sort of accelerating characteristics in the business side. That's what we consider a value trap. So as we look to shift a little bit from the growth sector toward the value sector, we're going to be looking for companies that also have acceleration in their business. So trying to separate the value traps from what truly is value, is going to be a big theme in 2022. And then the other thing we talked about was sort of the technical damage that we have seen in the software and technology sectors. You know, if you've been following along or investing in software, you'll probably understand and agree with us that, you know, technology and software have been in a bear market for the last few months. And then in the letter this week, you know, we show some charting examples and evidence that there's really a lot of technical damage on the charts of some of these companies, and actually, you know, on software in general as well. So we cover all of that, and, you know, show you what we're looking at here in house. And again, key themes for this year, we think, you know, energy, materials, and financials are really going to benefit from what we think is going to be a rising interest rate environment this year. And a lot of these companies are solid and quality businesses. You know, price is a function of both earnings growth and multiple growth. And what we've seen with growth stocks is a lot of them are very richly valued. So there's really no opportunity for multiple expansion, though they may grow into their multiples. But what we're seeing in some of these other sectors that I mentioned before is a lot of these trade at below market multiples today. And we think there's a possibility for these companies to expand their multiple and also to have earnings growth. So two ways to win there. And so that's the theme for this year, that rotation from growth to value, looking at companies where you can get both earnings growth and multiple expansion. And we talk about a lot more of that in the letter. So again, click the description below. We'll have the link to the newsletter. You'll be able to get it into your inbox. And also, please take advantage of that offer for $99 a month for the next 6 months to look at our investment research. I think it will really be helpful to especially people who are heavily invested in growth stocks, looking for ways to reallocate and reposition their portfolios. So again, we'll be doing this on a weekly basis, and we'll look forward to seeing you again next week. Thanks again. Bye now.